Hey everybody, so I previously went over key levels on the overall market. I have that pulled up right here. We're still in the untradeable zone. We saw a brief visit to the bullish zone and then that little slight dip yesterday into the bearish zone. Right now I want to cover some notes that I took for the Fed meeting minutes. I have 5 things to go over and then a little summary and then a too long didn't read. I'm going to have that pulled up on the screen as well with some timestamps so you guys can jump around as you need. I'm going to kind of do this quickly just to try to get it done in one take. First, I have the labor market. Unemployment remains low, but the Fed acknowledges slower hiring and rising risks to employment. The result of this is the Fed is more likely to cut rates sooner. The second category I was looking for was economic outlook. This overall was a major concern of the government shutdown that just reopened. However, with the shutdown, 2025 GDP still appears stronger than expected with no specific figure. And this is implying the economy could be growing stronger despite slow job gains. The result, a stronger GDP gives space to keep rates high unless jobs weaken further. The third category that I was looking for and that I took notes on is monetary policy. Balance sheet runoff ends. By ending the runoff and speculation that the Fed may be rolling maturing securities into T-bills, the Fed will essentially stop draining money from the system and shift into safer assets. This is generally bullish and just increases liquidity. The fourth thing I covered was inflation. I just have cooling written down. And then inflation is cooling as seen with core CPI slowed, but core goods are still not dropping as much as they'd like to see. Overall progress is seen, but jobs not done. And then the result for that was no concern for immediate cuts. The last category I have is credit conditions, keyword tightening, and this is the data to focus on to avoid a recession. Low credit score borrowers are struggling and delinquencies are rising. Overall, tightening credit is resulting in a more cautious Fed and more likely to cut in 2026. Here's a summary I have for you guys. It's just 2 statements. No rush to cut and no desire to hike, no new commitments. They want to see more labor and inflation confirmations. And the too long didn't read or didn't watch is pretty much just a shorter version of the summary. Cautious, concerns with labor market and inflation. Pulled up are the key levels. Again, you guys can go back and watch that video. I don't want to go over them again, but you guys can see how price is currently reacting to the structure that I have highlighted on screen. That's going to be all for this video. Early on today, I uploaded a Walmart trade and Nvidia stock analysis, so make sure you guys go check those out. Later on this week, I'm going to be diving into the discount codes that I have coming for the Discord group, so make sure you look out for that. That's going to wrap up this video. Thank you guys for watching, and I hope you enjoyed.